happening in our market. And we thought this could be a good opportunity to learn from some experts as well that how this concept, this mode of financing is working in the other parts of the world as well. So we were very glad, first of all, let us welcome Shahzeb Saab. He's the Commissioner, SECP, for his efforts and for launching this initiative in Pakistan from SECP. We have our other speakers. So Mr. Ashar Nazim, who is an expert in this area, and I'll share the detailed profile as well. And our colleague from CFA Society Pakistan, Mr. Ali Farid Khwaja. You hear him quite often from this platform and other platforms as well, talking about the Fintech and other landscape in Pakistan. So first of all, Mr. Jabri's introduction of Mr. Shahzeb Ali. Shahzeb Saab is the Commissioner at SECP. For Securities Market Division, he's a chartered accountant with more than 25 years of professional experience. And before joining SECP, has spent a considerable time in the multilateral institution and private sector financial institution. Thus has considerable exposure to both public policy and actual practitioner. So we would like to welcome you, sir, here. And with that, we have our another speaker, that is Mr. Ashar Nazim. We are really thankful for joining us here. Ashar is the Group CEO of Aion Digital. Formerly, he was the Senior Partner in ENY and Global Head of Islamic Banking, and engaged in the build out of Fintech ecosystem in MENA, advising several Islamic banks on structuring and implementation of Fintech solutions over the past 20 years. He has helped in operational build out of more than 30 Islamic financial institutions and national level programs. This year, Pasha won the MEA Finance Award for the best technology leadership in his role as founder and CEO of Aion Digital. So congratulations from our side as well, Ashar Saab. We would be looking forward to hear from you. And with that, our colleague from CFA Society Pakistan, who is going to again take us forward on this panel discussion and the talk with the speakers as well. So Ali is the Chairman, CEO of KSB Securities, and he has 15 years of experience in financial markets, and couldn't be a better moderator for this session, because Ali has closely followed the fintech developments in Europe and other regions, being as an analyst and as a practitioner as well. So with that, we are really excited to hear from you all, and I'll sign off and hand it over to my colleague Ali Farid Khwaja to begin the proceeding and take us forward. Thank you very much. So Ali, you first, please.
Great. Thank you so much, Asim. This is, welcome to this webinar. This is an extremely important topic. The growth in the tech sector is transforming every industry. And I think over the last 18 months, a lot has happened in Pakistan, especially with SECP. They launched the sandbox, they introduced regulation for crowdfunding. Yesterday, they announced giving a license for P2P lending. Before that, they launched the gem market. So, a lot of change is happening in Pakistan. And, in textbooks, we read about the insipid, the slow bureaucracy in Pakistan, but certainly a lot seems to be changing. And for that, Shahzeb Saab and his team at SECP deserve a lot of credit. And, it's entrepreneurs like Ashar who are benefiting from this. Very appropriately, I'm sitting at a co-working space in Lahore called CoLabs. And outside, there are 350 tech guys who are working. And the growth in this sector has a lot of energy. So the format, so I'm really excited about this webinar and hearing from Shahzeb Saab about the steps which SECP has taken, and then from Ashar about how fintech companies can use crowdfunding. The format of this webinar, before I start the discussion and before I pass over the mic to Shahzeb Saab, just some rules, housekeeping rules. Sarbat, do you want to put them up, or should I just tell them? Because they were fairly basic. This is a 1 hour call. Please keep yourself on mute. Yes, participants are required to stay muted. There will be questions at the end. Please put your questions on chat, and then I'll just read them over to the speakers. This session will be recorded, and the recording will be posted on our website and YouTube channels. And most importantly, after this webinar, we will show you a QR code with which you can give us feedback on this webinar. And the feedback form will also be emailed to you. So it's really important to get the feedback. So that will be at the end. So with that, Shadab Saab, over to you. Would love to hear more about the steps, the wonderful steps which you guys are taking.
Thanks a lot, Ali. Just give me a minute and I will share.
You are muted. So, Shadab Saab, we can't hear you.
G. Ali, sorry. I'm just sharing a presentation. Can you see the presentation?
Yes,
okay.
It's on the screen.
Okay. Yeah. So you actually have taken out some of the thunder out of my talk by saying so many things positive about SECP, and I could see, I don't know, that type of excitement and happiness on your face is shared by other people also. I don't know about that, but I can see the happiness and excitement on your face being a young professional and entrepreneur, and we want to see that type of excitement on probably every young entrepreneur and every young professional's face. So the thing is that first I will sort of try to browse at a very high level what are the macro objectives and how this thing started. So as you know, government is quite focused on export-oriented business, and we as being larger part of, despite being independent regulator, being larger part of government, we want to align ourselves with the strategy of the government, which, and to me, I think on a personal level also, I am fully sold to that. So one is growth of export-oriented businesses, then investment in technology sector, innovative solution to foster efficiencies, investment in small and medium enterprises, and leading to financial inclusion. So the thing is that when I started here, so about two and a half years back, I think on 2 or 3 things we were very sort of focused. One, obviously, provision of availability of capital, but more than that, what we can do in terms of technology, how can we use technology on 2 accounts. First, obviously, how to sort of use it internally in terms of bringing in more efficiency into our systems, making it more service oriented and client friendly, and simultaneously reducing turnaround time significantly. So we kept on working, although if you really ask me, I'm not fully satisfied on our progress for our internal automation solutions, but to sort of do things which are very easy in private sector, in public sector, they become very difficult. There are a lot of procurement related challenges. There are certain external things which you cannot manage, but we are still on that. And I think that is one of the project which is called LEAP. LEAP is some of major reform internal activity which we are sort of focusing. Second thing which we talked about, that how we can actually engage with fintech professionals and how can we use technology and do disruption, because we talk about growth of capital markets, and growth of capital markets involves probably, I think disruption is something which I thought about, the disruption from new entrepreneurs, from technology, and from the people who can think completely out of box and come up with the solutions which actually normal issuers, intermediaries, and even investors, they are not considering. So we started interacting with fintech sector. We made different committees, working groups, and there were certain things which came out. And out of those things, So like out of those things, the biggest thing which came out for startup enterprises, that there were three pillar structure. If you sort of try to put it like this, on the regulatory side, there were three regulators which were key to generation of the capital and formation of these company, and their smooth operations and their growth. So one was taxation regulator. There were certain taxation related issues which we obviously cannot control. We can only advise and share with them that what can be done. Second was the issues related to central bank. Again, there were one or two, but they were key issues, and we obviously shared that with central bank and institutions and the groups which are on that side. They are also directly doing that with these regulators. The third thing which came to us was actually the, the problems on company law side that startups was facing. They were, to give you one or two examples, was for example, buyback in case of private companies, employee stock option in case of private companies. Then there were certain other regulatory requirements in these private limited companies. So what we did was that after sessions with our these incubation centers, session with market stakeholders and everyone, we came up with a revised, or with the Companies Act Amendment Bill, which actually, with our efforts and everything, it was rolled out as an ordinance on 30th of April this year, 30th of April 2020. But unfortunately, there was some certain other reason that it got expired, and now it will come in form of a bill. So that was one side in terms of capital generation and all that for the technology companies. Second side, which we thought that how can we involve these technology solution, technology platforms in terms of generation of capital and using these tools for further capital generation and doing disruption for our intermediary side, or meaning the brokers, and then for our exchanges. So when we come to access to finance, the current avenues which are used by, and typically for SMEs, if you talk to SMEs, they will use more of informal channels. And within these SMEs, I think then we also need, if we talk about SMEs, I think it is better to use term MSMEs, micro, small, and medium enterprises. Middle markets in this country are slightly better managed, and they are in a better position where they can actually raise the capital. But typically on the micro and small, there's a huge problem. So, and if you talk to these people, they generally depend on informal avenues. So, and to a very large extent, bank and financial institutions. The institution which have sort of, to a certain extent, help these micro organizations are these microfinance bank which have done that. And within those microfinance bank, again, the thing which has importantly played the role is these technology platform through and investment of these cellular companies into these organizations. So subsequent to their interest and bringing in capital, which for investment in technology and using those platforms for different purposes. So availability of capital for micro and to a certain extent smaller organization have improved little bit, I would say little bit. But from the banking side, I think the capital which is available typically on the lending side for middle markets and even for SMEs, smaller segment of middle markets, is quite dry, I would say. Venture capital, private equity, again, that is an area which is quite nascent. It is not growing. There are certain things which probably we have a problem. We have on multiple occasions revise our regulations, and then there are certain issues on the taxation. And again, on the central bank side, I think there's recent change in central bank regulation, which will go a long way to taking this private equity space forward. So then we have our main board and sub board, which is called Growth Enterprises Market GEM board, which Ali was referring in the intro. although there's not a single transaction which has been done on that. But I think a lot of potential over there also. And then finally, crowdfunding platform. On the main board typically is the old one where the companies are there, they are listed companies, although still there is a lot of space over there to grow. But I think in terms of building up the whole value chain or whole food chain, it is important that we should actually not starting from informal, but from the formal side. I think all these things have to be sort of really mobilized so that we complete that food chain. And in terms of, and then people can have exits through gem market and through main board once they are moved up from these things. So coming up to, on this slide, we have actually explained that we introduced the term of startup in the company's amendment ordinance 2020. And this all came up after thorough and detailed deliberations with our private sector stakeholders, who are actually the stakeholders in there, and then the practitioners also. Further issue of capital, otherwise than right issue and through employee stock option for private companies, buyback of shares for private companies, and testing of innovation. The final thing is not related directly to the Companies Act. The other thing which then actually not going typically in the order of this presentation, but when we sort of interacted with people, the thing we made draft regulations for equity crowdfunding. And when we shared it with the market, predominantly feedback we received was that for the success of those regulation, the thing which is important is that we need to open up it for the individual investors, so that individual retail investor can actually invest through equity crowdfunding platform. In the current structure of legislation, which is Securities Act 2016, it was not possible to do that. So what we are doing in parallel, that we are actually working on the revised bill, revised securities bill, which will actually be submitted after the approval of Ministry of Finance and Ministry of Law and federal government. It will be submitted to the Parliament for its approval. So once the revised bill is approved and it is converted into new Securities Act, then it will open up the window for the retail investor to invest in ECFs through these equity crowdfunding platforms. So that was the predominant feedback which we received. So we actually came up with the solution that whatever we can do through a restricted structure, which was the regulatory sandbox structure. And in that, it can be tried, and simultaneously, the other things which can be tried, which we have given as examples. So as you people know, that regulatory sandbox is a tailored environment for conducting limited scale live tests of innovative products. Sandbox helps in testing the viability of innovative products, creating conducive regulatory environment, financial inclusion, and access to finance, all these things. And so it is again efficient in terms of sort of testing the products in controlled environment, and where you can typically, because the point is that from a regulator's perspective, the type of pressure we are facing when we doing new things, there's a lot of public pressure. If something goes bust, understanding of retail investor in terms of understanding difficult products is very low in this country. Second problem is that we mostly, and due to our fundamental inherent problems, what we have done is controlling the investors or other things. We have tried to do it instead of enforcement. We have tried to do it through regulation and laws, so that we actually block and we try to do things through regulation. We do not allow people to take risks. And the issue is that enforcement in this country is very difficult. Overall contract enforcement, working of our courts and law systems, because you cannot enforce any ordinary contract. So these things become really difficult. Second, coupled with that, the understanding of individual investor of these products, you will find people who are very educated. They have done their PhDs and they are doctors and engineers and whatnot, but their financial understanding is generally very poor. So challenge for us is to also cater for that. So in that background, I think this sandbox environment is something which gives us additional comfort also, and considering the fact that that the feedback which came in terms of retail investors, we thought that this is a good solution. So we took we decided last year, in this year, March, that was the last day of submission of applications under the regulatory sandbox structure. And now we have given approval to 6 projects under the regulatory sandbox structure. So if you compare this thing, this was adopted by UK in 2015, then ASEC, Australian Securities and Exchange Commission, 2016 again, US 2016 again. So it is being tested, but you can see it is mostly in advanced markets where people are doing that. So we are trying to sort of test the things which actually currently advanced markets are doing. So the 6 platforms or 6 projects which we approved under the regulatory sandbox structure were digital insurance, digital platform for mutual funds, robo-advisory, P2P lending, and crowdfunding. So these were the approvals which were given by the by SECP under this regulatory sandbox structure. So now crowdfunding is again something like private markets and again the normal market. This is something which probably I foresee that this is future of our market, and typically for the markets like ourselves, which are not developed market and which are actually developing markets, they can actually use, because this is something which I generally say that this is technology is something which can help you leapfrog all those other things which people are sort of doing, and instead of going through the whole cycle which other economies and other countries have done, if we come through the technology route, what will happen is that we will leapfrog all of that and we will directly go to a completely developed structure. So if you have seen, and if something which is comparable, if we have seen that how money transfers are happening in Chinese market, and how money transfers is happening in the African markets, which are not very developed market, and both in terms of their size and scale and in terms of their maturity, I think these are certain examples which we can draw parallel with. So second important thing about these crowdfunding platform and the type of projects which come over there are generally the projects which are actually pushed by the people who have very strong entrepreneurial skills, who actually are not risk averse, rather they are very aggressive in risk taking. And third thing is that upside also is, as it is risky, so upside is also there. So to me, I think this is some area which can actually cause major level disruption, both on the equity and debt side in terms of raising the capital. So this is being considered some major or one of the most important projects from our side. So if you compare international markets, I think the Chinese market is by far the largest market in terms of crowdfunding. And even in this crowdfunding, if you further go into the details of the data, you will see that majority of that crowdfunding capital which has been raised is in form of debt. Debt is predominant as compared to equity, and which is understandable also. So for newer projects, I think, and then there would be convertibles and all sort of that stuff. So, but debt is actually predominant in this size, and China is again very large. And if you sort of compare China in terms of technological development, for example, if you think about a very, very important element of technology, for example, in terms of artificial intelligence, China is, if you see any scale or in any ranking table, you will find China as the leader by far, and that has changed in about last 7-10 years. At one point in time, artificial intelligence was led by Japan and then subsequently United States of America. And now China is leader in artificial intelligence. So this technological development generally corresponds with what we see on this data. If you think about Ant Financials or more likely known as Jack Ma's company. What was its name? So Jack Ma, if you think about Jack Ma's company and financial and this, all these things, so they are major technological and simultaneous commercial and economic transformation in terms of this size. So Ant Financial is today larger than most of the European banks. So which is a thing which could not have been even thought of about 5 to 10 years ago. So, and you can see that reflection in this table, which I'm currently sharing. The first, the project or first cohort which SECP has approved, it is Pakistan National and Investor Portal, and it will do live testing and experimentation of equity crowdfunding for a period of 6 months. And what will come out of that testing phase will determine the future course of action regarding regulating crowdfunding. And what we are expecting is that as we move forward on this side, and we will understand more about it, and we will work more closely with the platform. The other thing which will happen is that we are simultaneously working on our securities bill, and that will also open a place for retail investment into that space. In this website, we have actually made a small chart in which we have shown that how issuer will interact with the platform and eligible investors. So actually what will happen is that issuer will approach the crowdfunding platform and simultaneously eligible investors. So both of them together, they will actually attract eligible investors, and then eligible investors will put the money in escrow account, and then escrow account will, then the money will move to the issuer after issuance of securities in the DMAT form. So anybody, private limited company, public limited company, they can raise money through this crowdfunding platform. Users will be the responsibility of crowdfunding platform. Eligible investors are institutional investor, individual investor having net worth of at least 15 million, excluding their personal residence. Offering is governed under private placement regulation of SECP. Crowdfunding platform is allowed to market platform to potential issuers. Then the other main features are per issue investment limit for individual investors, minimum 100,000 and maximum 500,000. Issuer to provide exit to investor. They can potentially provide exit to investors through the GEM market, which is growth enterprises market, under PSX. Securities shall be in book entry form, DMAT form, as I've already explained to you. And reporting requirement, they have to prepare audited accounts under Companies Act 2017. Monthly progress report on implementation and utilization of proceeds would be shared through crowd equity funding platform with the regulator also. So that was broadly the main features of the first crowdfunding platform which we have approved. And simultaneously, we have also approved lately another P2P platform. So, and we will work with them. And we are expecting this to be something major. And I personally feel that this will also open up the venue for blockchain, and actually it could prove to be the major disruption for even for the formal markets and larger markets. So and again, I don't know how people think about it, how my other colleagues think about it, but to me this is small window opening, a small opportunity which can actually exponentially grow on multiple fronts in next 5 to 10 years time. Thanks from my side. And if there would be any question, I will be happy to answer that.
Thank you for that, Chaudhary Saab. It was certainly music to my ear and very refreshing to hear a regulator talking about leapfrogging, talking about encouraging risk-taking, and talking about disruption. And I certainly share your vision. And I think another person, moving to the next speaker, who Asher must share this vision because he's an entrepreneur in the fintech space and a very successful one. So with that, Asher, over to you. How will entrepreneurs make the vision happen?
Thank you very much, Ali and Shahzeb Saab. I mean, that was a good setting the tone. Assalamu alaikum, everyone. This is Asher Nazim. I'm based in Bahrain. I've been with EY for a long time, and I've been a regulator in Bahrain as well with the Central Bank of Bahrain. And last 3 years ago, I took a plunge, giving up my partnership and launching Aion Digital, which is a financial technology firm specializing in building digital financial institutions. I would love to share my experience of, again, making this successful through, and one of the key features was crowdfunding. So just to give you an insight into our business, we are a 4-year-old company. And so far we've raised about 4 million USD in capital. Of course, we are revenue generating as well. We won more than $25 million worth of contracts in the last 4 years. And therefore we did not need a lot of capital later on, but really the crowdfunding as the first ladder was really that triggered our success, I would say. So my theme would be more geared towards startups, but also let me, it's important for one to understand how the crowdfunding ecosystem is working, right? Who are the key actors, which is the crowdfunding platform themselves, the issuers, and then financiers. Right, and what are their likes and dislikes? What are the do's and don'ts? And therefore, let me set the tone first. And what does success look like? What are the business model considerations to making crowdfunding successful? What we are seeing happen in Dubai and Saudi, which is our market of operations, as well as some other developed markets and emerging markets, the small and medium businesses perspective, as well as the financials perspective. First and foremost, making crowdfunding successful in Pakistan, we've got to be very clear on our objectives, right? What exactly are we trying to achieve? And really, based on those objectives, different jurisdictions have taken a different view on the crowdfunding regulations. So for example, crowdfunding could be person to person, right? It could be person to government. It could be person to business, and there could be other models as well. And very clearly in Bahrain, for example, the regulator took a view that person to person crowdfunding will not be allowed in the initial phase. And the reason for that was, again, to protect the small, unsophisticated, normal investors, right? I mean, who may not know it better and may end up losing a lot of capital. So they said, you know what, we are just getting started. We need to start small. And therefore, the only thing we will allow is person to business, person to small business financing. And I see some messages, from Shahzeb Saab as well, on similar lines. So they defined what the small businesses are. They defined what the eligible issuers are. And they also defined who are the investors or the financiers who can actually invest, right? And it was driven by two primary objectives that we are seeing in the market here. One was, how do we give better access to finance, alternative access to finance to small businesses? And two, everyone understands that giving control back to individuals, to people, to manage how their money is invested, also makes a huge difference in terms of catalyzing growth and providing liquidity to small businesses, which in Pakistan's case is our backbone. Right. So although I must say that, in one form or another, Pakistan has also experimented some very innovative crowdfunding through traditional models. So, for example, the DAMS project, if you think about it, that was citizen to government funding, right? And then that was a classic example of crowdfunding from citizens to government. And there are many other examples as well. As a startup, one needs to understand how are these crowdfunding platforms competing and how are they different from banks. So from a business model perspective, you've got to understand that this is primarily many of the crowdfunding platforms are giving out unsecured financing, right? And what that means is, again, for small businesses who do not have a lot of collateral, it makes, again, getting access a lot easier than going through, for example, banks, right? The other one is the investors, the people who are investing through crowdfunding platform are, again, eligible investors in many cases, which basically means they have a higher risk appetite and a certain minimum net worth or net asset value. As a result of which they are able to, they're not really, they're not really regulated depositors, right? I mean, or for example, from a bank's perspective, you cannot invest in high risk securities because these are regulated insured deposits, right? In this case here, this source of funding is not really insured, it's not really regulated from a banking perspective, and therefore it has a higher risk appetite. You've also got to understand that this is not, as a startup, that the crowd fund is not equal to free money, or there's no shortcut to it. You've got to have a very compelling business case. You've got to have a very strong story, underlying story. And the reason is successful crowdfunding platforms deploy innovative credit scoring models, which are also different from traditional banks. They rely heavily on a number of additional data points, and that could be your social profile, for example, from various social media websites. It could be your different utility bills, history over that. It could be spending pattern, right? And as the market matures in Pakistan and as open banking becomes a norm, you will see access to that transactional data will help tremendously feed into this innovative credit scoring, and therefore make this financing or lending from crowdfunding platform a lot more sustainable. In the interim though, we'll have to keep an eye that we don't end up funding a lot of lemons, right? And the fourth part is these crowdfunding platforms have a very lean operation and also light regulations compared to other regulated entities. And therefore their cost structure is low. They're able to move a lot faster. So for example, WeChat, if you think about it, in China, they give out now they approve up to $30,000 in funding in less than a minute, right? And there are many other crowdfunding platforms who have matured to the extent that they are able to provide answers in less than 48 hours with an initial yes or a no, preliminary yes or a no. So for the platform themselves, the key to success will be if you can demonstrate that lean and agile approach so that your target customer base actually believes in you. So overall, across the world, it has, of course, taken off quite well. Different models, as Shahzeb Saab alluded to, that China is the biggest market. US and UK have different models as well. There are a number of different players out in the market. They all have a slightly different operating model, if you think about it. And key considerations of the business model, as we see more and more crowdfunding platforms come up, what you have to remember is, as a startup, there could be crowdfunding platforms that are funding you from their own balance sheet, right? So there are crowdfunding platforms out there that actually do the underwriting or the lending out themselves. There is another model out there, which basically means they're only arrangers, which means they connect the lenders and the borrowers, and that's all, they facilitate, right? And a third one is a hybrid model. So what we are seeing is sometimes they will fund part, so crowdfunding platforms will fund part of the ask themselves, and the rest of the ask will be through other financiers or investors, right? I mean, so you'll see all these three models at various stage of maturity in different markets, and each have a different connotation in terms of both pricing, speed, solutions there and so forth. The financing products that you see expect a simplistic product portfolio initially. So what we are seeing in a market that are just starting is a straightforward term loan kind of a thing. It's anywhere from 3 months to 36 months, right? And on a very straightforward basis. However, as we mature, you can expect working capital finance, you can expect revolving lines of credit, and so forth. So a number of different financing instruments are out there that you can leverage. And if you think about it, I mean, again, who are the people funding you, right? As a startup, who are the people funding you? So it could be the marketplace itself, the crowdfunding platform itself, but primarily it will be eligible investors, on the other side. And these investors primarily come from they are small retail, small investors. Let's put it this way: common individuals like you and me. However, in more mature markets, we have seen the tilt towards institutional investors now coming in a big way, as they build this confidence on, because this also gives them access to small businesses, which otherwise they do not have that efficient access. So from expect and what expect. One is, of course, you have another channel to access new funding. You can expect speed and convenience, in terms of how much time does it take for this decision making. And you can, however, it does not necessarily mean that this money that you'll be raising it could be or it could not be. In fact, if anything, evidence tells us from other markets that money raised from crowdfunding platform is either equal to or more expensive than what one is getting from banks and other avenues. So again, which makes me believe that it is not about the pricing is not an issue. It's the bigger issue for SMBs is basically access to funding. Right. So, and from a and what will make this crowdfunding platform more effective, more efficient, and will make it a massive success is a few infrastructure points that need to be out there. And the main one there is about digital identity. And that in normal terms, we call it eKYC. eKYC is really a start. But if you look at a number of other markets, including our neighbors, they've really made stellar progress when it comes to, again, maturing how to protect, safeguard digital identity and make sure that everyone out there has one. Because that really makes, again, participating through this platform a lot easier. The other part is going to be about the data models, right? Again, it is all about access, having a strong data infrastructure at a national level and the ability of the platform actually to source the right level of data, alternative data on you. And of course, the legal and regulatory ecosystem will determine how quickly or how slow this entire market is going to evolve. I'll talk about a few use cases as well. But just before that, in terms of making it successful, what we are seeing is, yes, you need crowdfunding platforms to start to get the ball rolling. But then you also need a number of other ecosystem players, and that will evolve slowly. So, for example, the eKYC specialist will be a key area to address right up front. Similarly, different institutions who can provide ancillary solutions to help on the data side will be very important, right? The second part, what we are seeing is partnerships. So crowdfunding platform will get into partnerships with, for example, banks or other finance companies to make, again, their proposition more viable. Also, what you will see is a number of distribution partnerships coming up, right? And what that means is, again, either via banks or through retail chains, etc. So I think Pakistan is in for very innovative next few years, as China, if that is any example, in first 4 years of their evolution, number of platforms grew from 20 to more than 1,500, right? So it is that kind of scale, it is that kind of success I believe that we should be aiming for and getting started. I'll give you a few examples in terms of what has gone really well, right? So Monzo, you may have heard the name Monzo. It's not a small business, but it's a digital bank now. It's quite a well-established digital bank. And in 2016, they launched a crowdfunding campaign, and they raised about 1 million USD in 96 seconds, and that was a record. And that was the first step on the ladder. And 2 years later, they were able to raise a much bigger tranche and 20 million. So what really the message here is, this is the crowdfunding can be your first step on the ladder, and it helps you expanding your financing base big time, right? In due course. If you look at our example, Aion Digital, in 2017, when I started this, I met up with another five friends, and we put in through traditional means about $150,000 together, right? And that was the first step. But then very quickly, we were able to go to the crowdfunding route and raise another 300K from 21 additional investors. And that led us to really build on this 450K base. And by the time we completed our seed round, it was $2.5 million we had raised from crowdfunding. And that made our, Series A lot easier later on when we went for it. What you will also see is another example I will leave with you is BNP Paribas, who as a bank partnered up with Ulule, which is a crowdfunding platform. And as a result, they were able to synergize and really build their market access in a big way. And a very important example, which is also very relevant to Pakistan, is again the Indonesia example. And there, one of the crowdfunding platforms, which is Ethis, was able to, in the initial phase of the business, was able to actually do 3,000 transactions in the affordable housing space, raising funds for about 8,000 affordable houses, right? And with a value of about 43 million USD. So there are some great examples of how crowdfunding has really been a stimulus, a catalyst in terms of providing access to new sources of funding to small businesses, and not just small businesses, but also projects of national significance. Let me stop there. I can go on forever, but I'm conscious of the time. So let me stop there and turn it over to Ali for any questions or comments.
Thank you, Ashar. This was fascinating, and I love the examples you gave. And now we are open for questions. And please write your questions on chat, and I'll read it to Shazib or Ashar. Ashar, if you can stop sharing your screen, then we can go back to the earlier screen. And I'll kick off with the first question. It is from Hamza. I think it's a very interesting question. It's for you, Shazib Saab. And he's asking that, have you also looked at donation and reward-based crowdfunding platforms? Because I think globally, Kiva is a very large donation-based crowdfunding platform.
Thanks, Ali. Yes, we have looked at them, but as of now, one, donation, we are not the regulator for donation. So I think that's not our area of key interest. And simultaneously, so reward, I don't know, because reward has multiple angles to that. So, but our first preference, we have looked at all of them. We have looked at donation, we have looked at rewards, we have looked at equity, and we have looked at debt. But as of now, our focus is equity and debt. So once that develops, then we can potentially at some point in time look at those options also.
Got it. Thank you. I'll use this opportunity to ask my question. Shadab Saab, you alluded to Bitcoin while you were talking crypto, blockchain, sorry, not Bitcoin, blockchain technology. And recently, SECP also published a paper on that. Can you give us some color on, what SECP is thinking about it? Because I'm sure your paper went viral and all over in the tech world in Pakistan, everybody was talking about it. So we'd love to hear more from you, a bit more from you about it.
No, you're right. I think if this is something which is really close to my heart, that how can we sort of bring in efficiency, more security and transparency in the market. So in terms of objectives, and I think this blockchain thing is something which can actually substantially transform. And as we have discussed at that point in time, there are two or three assets which I think are very doable, even on a very quick basis for this thing. And if you've gone through the paper of digital assets, which we have shared with the market, we have kept it very open. We actually asked the people that should we regulate that, or we not regulate that, because without regulation, are they comfortable in that way, or are they comfortable in a way that, for example, that it should be regulated? So I think in this country, because people have love for real assets as compared to financial instruments or financial assets. So I think if we can, or if not actually we can, if somebody can come up where they can create a digital asset against a real asset, for example, real estate, that could be a huge opportunity in this country. And how blockchain can be exploited and how we can play a role in terms of creating enabling environment. So what we are looking at, to us, this is something which is as a huge opportunity. Second thing, which probably and one thing which actually has been addressed by Ashar in his presentation, that is eKYC and AML. This is something which is very important. Although for our capital markets, you know that there's a centralized KYC organization, and we are also trying to digitize things over there. But if somehow we have something over there or over here also, that can actually solve a lot of problem on that side. So in terms of, I think one real estate, one probably precious metals, in which again our country has a lot of love with this gold. So these are the things where, and third is probably public debt. These 2-3 classes of asset, I'm really sort of excited to think about them. How that will happen, what exact would be sort of the whole like ecosystem, how that will pan out. This is still up there in open. Why we have thrown that concept paper in the market is we can discuss with potential people or potential entrepreneurs who can create that enabling environment, who can think in that way. But to me, I think that's a huge opportunity. All these 3 classes of assets, there are a lot of people who are invested in there. Amount of investment in these 3 classes are the highest, and probably the risk appetite for such classes of assets are there. So, so to me, I think that could be potentially the starting point on that blockchain side. So, but if you ask me how clearly that will happen in next few years, I don't know, honestly. I think this is a huge opportunity. We actually have sort of put that in the market, and we will try and we will push for that could happen. But obviously we need to have people, or we need to have entrepreneurs and market practitioners who have to play a role. I hope I've tried to answer.
Thank you. That was that was very comprehensive, and it certainly is a big opportunity. And it also addresses some of the questions which are coming in. A lot of questions are about transparency and KYC, AML, and I suppose more digital identity, having a digital ID and having digital KYC actually brings more transparency and trust in the system, because some people are asking about things like how would you manage the risk? And if the system is digital, then it's much more easier for you as a regulator to monitor it and put risk management on top of it, because we all know that bad KYC is mostly done in cash, not in digital. As a follow-up question, there's a question from the audience, and they're asking about the regulatory sandbox initiative. Can you please elaborate on how a firm can go about approaching the SECP regarding the product? I suppose he wants to know about the process of entering the sandbox.
Yeah, right. Our first application, we invited our first application, and the period ended on 31st March this year. So once we are, we have absorbed 5 to 6 applications right now. So considering our appetite and considering our bandwidth and our capacity, I think it is difficult as of now to go beyond more than 5 and 6. So, but we have testing time now, and potentially somewhere in the next year, we will again open up this window for new applications. So the people who have not applied as of now, right now, they will most likely get opportunity next year. Somewhere either in first or most likely the second quarter next year, they will have an opportunity to apply in the next cohort.
Thank you. There's a question for Ashar, so Majid Munir, and he's asking that he's working on using crowdfunding for affordable housing. And you gave this example where crowdfunding was used for financing that. Do you have more color on it? Can you give us some more details on how they used it? Because of course, affordable housing is a big need in Pakistan.
Absolutely. And what I would suggest is look up a company called Ethis, ETHIS, who's been very successful, and now they are a multi-market company. But clearly, what drives it is the comfort of both the financiers as well as all the actors actually in the space in the property or the real estate asset class, right? And again, if you can somehow tokenize it or break it down into smaller ticket size, and again, create that transparency and also create that, again, the exit route very clearly, that really helped. I think what has really worked out, if I have to summarize it, are three critical areas. One is as a issuer, when you are explaining your business model, again, make sure that you are very, very clear and keep it very simple as well. Don't overcomplicate it. The other part is your regular communication with your financiers need to be there. Otherwise, very quickly you will lose their interest, right? And once you are successful with a small POC, what you will see is, again, scaling up is a lot easier because these are big ticket sizes, right? I mean, there's Ethis, and there is also Sarwa, SARWA, out of Dubai, that's doing very well. And now we are bringing it into Bahrain as well. So yes, this is all about, in the real estate asset class, how do you make this kind of returns, which are very handsome, accessible to small ticket investors?
Thank you, Ashar. So we have run out of time. So I think this is an extremely important topic. I think in Pakistan's capital markets history, there have been three major milestones. I think 91, opening up the market to foreign investors. Following that, privatization phase, which brought new companies like OGDC to the market. And then in the late 90s, the setup of regulatory institutions. And I think, perhaps this time, the big milestone would be the regulatory framework for enabling growth in digital, which could be the biggest milestone in Pakistan's capital market history. So I really wish well to SECP and to all the entrepreneurs. And I'm sure that, in the 90s, there must be opposition and hurdles to doing things like reform and privatizing state-owned entities. The government was dealing with regulation, with unions and cleaning up state-owned enterprises. So I'm sure, there will be challenges, but it's great to see that the regulator has an approach of enabling entrepreneurship and enabling the growth in digital. And as Shahzeb Saab mentioned, this is a trend which is happening globally. And he gave great examples, and, Asha followed up with details on some of those examples. So I really hope that this happens in Pakistan. With this, we have run out of time, and I know Sarvat wants to show a QR code. So we also want to be digital, and QR code is a big thing, especially in China. So there's a feedback form. If you scan the QR code, you will be able to get the feedback form, and please fill it. But we will also email it to you for those who don't do it right now. We had over 75 people in this webinar. Thank you for your time, Shahzeb Saab, Ashar. Fascinating to hear your stories. And, as I told you, that I'm sitting in a tech incubator right now in Lahore, and there's a lot of optimism here. So keep it up. Thank you. And I think we can wrap it up for the day. Thank you, Sarvat, for that face.
Thank you. Thank you very much. Thank you.